Hello and welcome. You're with us on BTTV. We're tracking a mid-afternoon trade. It's not looking so great right now. We are tumbling 500 points on the Sensex, Nifty down 160 odd points. Well, I mean, tumbling is a loose word given that, of course, we've seen consistent new highs all through the week. But it is disappointing to see markets ride this Friday, erasing some of those gains. Mr. Chokalingam joining us this afternoon. Mr. Chokalingam, what are you making of today's trajectory? Just profit booking, or perhaps a little bit more than that, telling us perhaps that the markets are waiting to knock off as they've been trading at those really high valuations now?
There are three reasons. One is, as you rightly mentioned, partly profit booking, because the overall market cap of BSE, all listed stocks have come back to record level. So people are booking little profits. And second, after touching oil, Brent oil, around $80, it has again recovered quite significantly in the last 2 days, after there are indications that China might liberalize the COVID lockdown. Because I believe that oil price is the single most dominant factor determining the short-term outlook of the Indian market at this juncture. Third, after a lot of millennials have come, a lot of traders have come for the first time into the market, as market penetration has increased 4.5 crore to now nearly 12 crore in the last 2.5, 3 years. What I observe is that, on Fridays, the retail investors, short-term investors or traders, they become extremely cautious. They don't build a position, rather than many people who personally also whom I know, they try to square up on Friday so that Saturday, Sunday, they don't have to worry about global developments. They can have a good sleep. So I feel this particular trend is now largely increasing across a lot of short-term investors. Of course, it doesn't matter for long-term investors, but for short-term and traders. So that is why, we see this downward volatility most of the time on Fridays.
All right, fair enough. Well, one pocket that's seeing a little bit of a decline is auto today, naturally on the back of slightly sluggish sales figures coming in. Mr. Chokalingam, what's your take? And within the auto pack, anything striking out to you, or do you feel there are better picks in the market?
Auto pack, the vehicle manufacturers have rallied. So within auto, I would prefer tire stocks,
Okay.
because though oil has recovered last 2-3 days, it is still down over 30% from the 52-week high. Even the natural rubber prices in the domestic market, they have hit a 2-year low. So both are extremely positive, because 80-90% of the inputs are either natural rubber or derivatives of crude oil. And also, as you rightly mentioned, auto sales are improving, prospects are improving. That is also positive for tire companies. So therefore, we continue to recommend MRF, which we have initiated quite a long ago. So we have given conservative target of 1 lakh rupee, but I believe it can even go beyond that. And my company also invested in MRF.
Okay. Mr. Chokalingam, we always love asking you your picks, so let's get a few of those going from the broader markets. Perhaps, you mentioned tire stocks. What are some of the other picks that you feel are still looking attractive in these markets?
I can present three ideas.
Okay.
One is, the Transport Corporation of India. Recently, we initiated. It's one of the oldest logistics company, good track record. It has got a rich assets. It has got 13,000, over 12,000 trucks, 14,000 IT-enabled offices, 13 million square foot of warehouses, and it's a diversified logistic play. It's into freight. It is into supply chain management. It's also into seaways. And on the balance sheet, it's a very impressive. In the recent years, it has reduced the debt by almost 75%, from 400 crore to 97 crore. Stock is also down by about 22% from the 52-week high. And surprisingly, it trades at 14 PE on 1 year forward earning. And there are some logistic companies are trading at exorbitant valuation. This looks too good to me. Second, Sun TV. Again, it corrected after going to 560. I believe this is a very good opportunity. As I mentioned earlier also, it has got a cash of over 5,000 crore. The IPL itself is valued by the industry around 6,000 crore. So these two alone account for 56% of the market cap. and the core television business is trading at around 7-8 PE only. And also they have got a new IPL license in Africa. They are into movie business, they are into OTT business. So I'm pretty confident that Sun TV can give excellent return. Third stock is Oracle Financial Software Services, OFSS. This stock is still down 26% from 52-week high. It's a subsidiary of $45 billion US MNC, and it is sitting on a cash of more than 5,000 crore, which is 11% of the market cap, and it gives extraordinarily impressive dividend. The dividend yield itself would be about 6%. It is into product development. Indian product company trades at exorbitant premium, whereas this surprisingly MNC trades at just around 11-12 P and 1 year forward earning. After a long time, today it has shown some momentum. Still, it is quite close to 52-week low rather than to 50-week high. I believe this is one of the safest large mid-cap stocks. And also, lastly, the rupee has fallen a lot, and these product companies, they get money from selling products as well as money from the maintenance of the products, maintenance charges, which are likely to give benefit out of rupee fall, because the pricing negotiation is less severe than sale of the product. So in all, I believe this is very attractive stock, Oracle Financial Software.
Okay, so lots of interesting picks coming in there from Mr. Choklingam. Mr. Choklingam, give us an example. For you have so many followers, of course, but for those that are tracking some of your picks, something in recent times which you recommended, which you've seen outperform. We'd love to sort of hear that story.
You mean the past stories?
Yeah.
I mean, there are many in the last 20 years. So if I want to present one which would be beneficial to the investors also, I can talk about Gensat. If you want as a story, we initiated once Gensat Technologies. We initiated around 160, it went to 560, we closed the call. Around 360, when it corrected again, we initiated, but second time we went wrong. But I would say that this volatility in small cap is very high, and one should not worry about it as long as the fundamentals are intact. The earnings have contracted, no doubt. That's why, but the stock has been punished more than 55% from 52-week high. So these are the kind of stocks, like a zero debt, lot of cash. Digital platform is almost close to 70% of the total business. So these are the ways to look at it and make a lot of wealth. In fact, again, in this stock also, personally also we have invested. And another great example I would suggest is Huawei Medical. This is a hospital business, and earlier also our clients have made more than 70% return. Once again we have reinitiated. Yeah. So this is another stock one can look at it. I think it has a potential even to double in the next 2-3 years, because the enterprise value per bed is only 1 crore. Most listed stocks in the mid-sized hospital also, they trade at 3 to 4 crore per bed.
All right, fantastic. Thanks for sharing some of that with us, Mr. Choklingam. I'm just going to take you through the market layout very quickly. We're still slumping, 550 points down now. I think that pretty much would have erased this week's gains, Mr. Choklingam. I think, if I just take a look at the numbers just off the top of my head, just trying to think of what's standing out otherwise in the market. A little bit of broader market trajectory we're still seeing. So there are definitely some brighter spots there. Tata Steel, Grasim, Apollo from the heavyweights. Some of the IT names are trying to hold out as well. We've got auto, a definite drag, of course, across the board. A couple of the Adani Group counters. That's perhaps where some of the lag is also coming from. Otherwise, in the broader markets, I think you've got names like a Tube Investment, Varun Beverages, Hinduja Global, Zensar. Mr. Choklingam was just talking about it as well. That one's continuing to move. Taracom, and smattering of a varied mix of names. Raymond's up 16% today. MTAR Tech is moving. BHEL, Amber Enterprises. Some of these names also moving higher. Mr. Choklingam, from the financials basket, what's on your list?
Financials, I would go with HDFC Bank, which has been underperformer till recently. Only last 1 month it has started picking up. I believe that ultimately in the next 6 to 12 months, it should be able to outperform ICICI Bank and Axis Bank. You know, the one single most important reason which gives me this confidence is that the penetration in the rural India. So recently they set up the rural division dedicated, and I have seen some of the suburban, semi-rural and urban areas in Tamil Nadu while traveling. Their ATM model and having branches only in the town headquarters and then connecting with the ATMs in the rural deep into villages also. It's very impressive. And there are almost 50% of the branches coming from rural and semi-urban. I think the next growth trigger will come from this particular segment. So the post merger, and because of the merger, aggressively they are collecting money also, because HDFC Limited has to fulfill SLR, all the other regulatory requirement like a bank. So they need a lot more resources, and HDFC Bank is on a right track in mobilizing a lot of money before the merger is finalized. So that also, roughly, the capital adequacy, if it is 10%, so every 1 rupee you mobilize, it can help you to generate a business of 10 crore. So all these additional resources they are mobilizing also will help them to grow their business substantially. So I would stick to HDFC Bank at this time, because we had some of the POC banks, but then they are all rallied almost even 100%. So unless they fall, I would not touch POC Bank at this juncture.
All right, Mr. Chokalingam, we'll leave it there for now, but we'll continue that conversation going here on BTTV and look forward to chatting with you again soon, Mr. Chokalingam. We'll keep an eye on markets. Right now, definitely not looking good. Let's see how we shape up at close.